All right. It looks like we have a number of folks joining us, and it is 9 o'clock. So I'm going to kick things off. Good morning, everyone. My name is Lori Zimmerman. I'm the Director of Professional Learning with MASA, and I am really happy and grateful today to welcome some of our friends from Baker Tilly to talk with us about the Inflation Reduction Act and how it might work in your school districts to bring in some additional funding for some of those larger projects that you might have been thinking about. So with that, I am going to turn it over to Ryan Fetters. Ryan, would you introduce the team that you have with you today? And oh, one reminder before we go, if you have questions that come up today as you are listening to the presentation, please put them in the chat and we will come to those at the end. We'll monitor that and address all the questions that we can at the end. So Ryan, you want to take it away?
Sure. Thank you, Lori. Well, I'm not going to introduce everybody. I'll let them introduce themselves, but I'm Ryan Fetters. I'm a municipal advisor with Baker Tilly. I'm working with schools for probably about 16 years as a municipal advisor. I'm a director and help lead the practice in the Minnesota region. And so with that, I'll turn it over to Jeff Bertrang.
All right. Well, thank you, Ryan. Jeff Bertrang, recently retired superintendent from New Ulm Public Schools. Recent acquisition to Baker Tilly in January, assisting Ryan with marketing and in connection to schools in Minnesota. So it's a part-time job for Jeff here. My job here is to connect people with resources in school districts and what can help them with their facilities and their school district finances. And I'll hand it over to Jesse.
Great. Thank you, everyone. Really appreciate your time this morning. My name is Jesse Nelson. I'm a certified public accountant and partner with Baker Tilly, and I'm working with school districts nationwide on the Inflation Reduction Act projects, compliance, different rules and information on this legislation, and happy to share some information with you about a very exciting legislation that's providing millions of dollars for these types of projects. So again, really appreciate your time. I've got the slide deck up, and what we'll go ahead and do and jump into our presentation. Just a quick overview is what we're going to do is we're going to talk about the Inflation Reduction Act from a very high level. We've got federal legislation that's coming out of Washington, D.C. It applies to all entities the same across the country. And then we'll slowly work our way into the details. How does the funding work? What are the considerations of school districts we should be taking into account? And then, as Lori said, happy to put your questions in the chat. And hopefully we can address some of those at the end. But if we don't, we'll put a good question and answer worksheet together and get that back out to the group. So with that, again, really appreciate your time. And we'll go ahead and jump right into the information. So on slide 4, the Inflation Reduction Act, as it's known, was federal legislation that was passed in August of 2022. Obviously, we know from federal legislation, there's a lot going on out there, 728 pages. But what we care about as school districts is that it provided billions of dollars of incentives for funding for eligible projects. So we essentially have a new funding source that's available to us through this legislation for the eligible types of projects and cost. The IRA as it stands today is good through 2032. So as the law exists, this is a funding mechanism or option that's going to be available to us for a long time. And then within the Inflation Reduction Act, we also have 70 separate tax credits. Now, obviously, as a school district, when we think tax credit, that doesn't normally apply. But what I'm going to talk about on the next slide is a big change to the Inflation Reduction Act, looking at tax credit and how it's providing opportunity for school districts. But the key on this slide is knowing that this legislation is good through 2032. So this is going to be an option that's available to you for many years going into the future. All right, so slide 6 is very important in that for several years, we've had a lot of incentives for clean energy properties, clean energy projects, energy efficiency across the country, but they've been in the form of tax credits. So a tax credit is, for example, if I owe the federal government $100,000, I earn a $10,000 tax credit, that immediately reduces my tax liability to $90,000. Well, the challenge for us as school districts and governmental entities is tax credits don't bring any value to us. We don't pay federal taxes. So the big change in the Inflation Reduction Act is that it created the direct pay tax credit or cash payment. And so a real simple example of this is, let's say we build $1 million solar field on school district property. We are able to achieve a 30% tax credit because we follow the rules and the compliance in the act. Then once construction is completed, we'll receive a check from the federal government for $300,000. So again, we're still going to have to follow tax credit code. We're still following IRS regulations, which we'll talk about in a little bit. But essentially now we as school districts and governments can participate because they've essentially created a direct pay tax credit to us where we can receive some funding for accomplishing eligible projects and eligible project costs. So this is a big game changer. Us at Baker Tilly, being a CPA firm, we've worked in the tax credit world for many years. And because of this change, now the governmental sector is able to participate. So slide 7 does a good job of giving an overview of how the system works and the eligible projects. So we'll spend a little bit of time on slide 7 because it's important just to take you through these projects, talk about some nuances and how the system works if you're looking to complete an eligible project at your school district. So in the lower left-hand corner of our slide, we have highlighted the eligible projects examples. Combined heat and power property, that's more for buildings that are running 24/7. Think hospitals, think casinos. We don't see a whole lot of those in school districts. Solar is obviously a big one. We're seeing a lot of solar projects for government all across the country, not as much in the wind area. Energy storage technology. So this is a broader category, but where we're working on this with schools across the country is in an area of thermal energy storage tanks. So bear with me here. This is an account that's going to do the best to explain this. I fully recommend you talk to your construction team. But what this is these are pieces of equipment that generate ice at night. So you're using electricity at off-peak hours in the evening when it's a lot cheaper. That ice is then produced and then can cool the building during the day. So you're not buying electricity at peak hours or electricity, and it seems to be a much more efficiency system. Obviously, you'll need to talk to your construction folks. They'll give you the professionalism, whether that makes sense for your school district. But it is another type of project that's eligible through the IRA if you're considering that or you have completed that project. Waste energy recovery and biogas. Think of your wastewater treatment plants and your landfills. Obviously, at schools, we're not going to be dealing with that, but those are also out there. And then geothermal is another system, and this has been a very large project that we are seeing a lot of. So the Inflation Reduction Act is providing a lot of opportunities for school districts looking at geothermal energy. So we have our types of eligible projects, and now we need to run them through the tax credit system in order to calculate where we may land on that tax credit front. So up at the top, if you're doing an eligible project, you're going to start at a 6% base credit. So I'm doing an eligible project. I have my eligible cost. I'm starting at 6%. The reason I say eligible cost is because it's very important in that not all costs are eligible. Think of types of costs that you're incurring to what they call produce the energy property. So, what would be an example of an ineligible cost? Let's say, on school district property, we build a solar field, but we have to put a fence around that solar field just because we want to keep everyone off the equipment. We don't want any damage. Well, we have to incur that cost for the project, but that fencing cost wouldn't be eligible for the IRA because it's not going towards producing the energy of the property. Landscaping, curb cuts, demolition, a lot of those costs we need to incur in order to construct that asset, but not all of those costs are going to be eligible for the IRA energy property or the tax credit. So if we start at 6%, and then we can move up to what they call a 5 times multiplier or move that credit to 30% if we follow the prevailing wage and apprenticeship rules that are in the Inflation Reduction Act. Now, we do have our own IRS guidance on what those look like, and it's very important that we follow those rules to go up to the 30% multiplier. From the construction standpoint and working with a lot of our construction professionals, prevailing wage, and even on federal or the terms is not too difficult, and they can work on that. But the apprenticeship rules are brand new. The IRA wants to encourage people to come into the construction industry. Obviously, having apprenticeships on the job would help with that, and they do have some ratios and rules that you need to follow in order to do that to move your credit up to 30%. If you meet the domestic content requirements in the IRA, so they look at your project, your equipment, how much was built in the USA, what was the threshold, that's a whole separate analysis. But if you can meet that, now you can take your credit up to another 10%. Energy community is a geographic location, so there's nothing you can necessarily do to earn that credit. You're simply eligible or not. The Department of Energy has a nice map. We have an energy community map at Baker Tilly where you can type your address in and you can get a good idea right off the bat if you're going to be eligible for the energy community bonus. Your next one, environmental justice, you could get another 10 to 20%. Again, this is more geographic by nature, depending on if you're able to apply for these or not. This credit is also an annual appropriation from the federal government. So you do have to apply for it. You may or may not get it. But it is a consideration when working with your tax compliant consultant on if you're eligible and if you want to pursue this portion or not. So you can see there's many different ways depending on our type of project if we follow the rules where we can add to that tax credit percentage and help with our IRA funding. Now at the bottom, you can see in red, we do have a deduction item. So if we use tax exempt funding for your project, we do lose 15% of the credit. The federal government can't collect taxes on interest income from tax exempt debt. That's why it's tax exempt, obviously. So they will reduce a portion of the credit. Now, I really like this chart and it does a good job, but here's the one area that I just want to clarify that it's a little bit confusing on it. The math is not, keyword being not, 30 minus 15. So if we were eligible for 30% and we use tax exempt financing, it's not 30 minus 15. It's 30 times 15. Get 15% of the credit. So if we were at 30% and we use tax exempt financing, our credit would be around 25.5% because we would lose 15% of 30. So just to clarify that when you see that chart, obviously we lose a little bit of the credit, but it's not so devastating that we shouldn't pursue that if we want to do one of these types of projects. Now, there's always the rule and the exception to the rule, as we know in the world that we live in, and IRA is no different. So if you're under 1 megawatt for your project, and that's usually easier calculated for solar, but there are IRS guidance on how the over under 1 megawatt is calculated for geothermal and thermal energy. If you're under that 1 megawatt threshold, you can go to the 30% multiplier and the multiplier of these categories, and you're not subject to the prevailing wage and apprenticeship rules. That doesn't mean that if you want to use those materials or those bidding options as part of your project, that you don't use them. It just means that you're not subject to that and you can still get the higher credit percentages. That also helps with the amount of record keeping that you'll be needed when filing the tax credit, and I'll take you through the process later. But being over or under 1 megawatt is a big decision point for your project because it's going to guide you whether you're subject to the prevailing wage and apprenticeship construction rules and how that could affect your project going forward. So again, slide 7 just takes a quick look at the eligible types of projects. We run the project through the system to see where the credit could be coming into, and that gives us the idea of the amount of dollar amount that may be eligible. So before I move to the next slide, one thing that's important we've got to keep in mind is that this tax credit is coming at the end. So just a quick overview of the process, and we'll talk about some detail, is we're going to build the project, and then we're going to apply for the direct pay credit at the end. So really our money is coming in on the back end of the project. So we've got to have the money up front to build this asset and do this improvement project. We're going to receive this check coming in on the back end. So we need to take that into account in our construction cash flow. And we also need to do a little bit of research on what we may or may not be able to do with that money when it's received from the federal government. Does it come in, can we drop in the general fund? Do we have to use it towards types of improvements? That's something also to keep in mind when looking at these projects and the timing of the funding and when it's going to be received. All right. So slide 8 is talking about, we do have some items in the IRA, what we'll call domestic content reduction factors, or what could also reduce the credit. So if you remember on my previous slide, if we followed the domestic content rules in the Inflation Reduction Act, we got another 10%. Well, as you can imagine, we're talking 30%, whatever percentages of multi-million dollars of projects, we're talking hundreds of thousands, if not millions of dollars, depending on the size of your project. So if the federal government's going to be providing this funding, obviously the more domestic content, the more built in America, the more that should be incentivized. So what this is talking about here is over time, if you don't meet the domestic content requirements, it's going to become a reduction of the credit. And that's going to be phased in over a period of time. So to understand this, I think that's helped me and most of the clients that we're working with is what I've put an illustration together is. Let's say we've got a $5 million energy property or project. We've got eligible costs. Calendar year 2023, which is now in the past. Let's say we followed the prevailing wage and apprenticeship, so we got 30%. We did not meet domestic content. No problem. They still gave us the 30% credit or the $1.5 million. Starting here in 2024, so if we start construction of our project in 24, and we have the same scenario, now they're going to take 10% of our credit because we did not meet domestic content requirements. So you can see we're going from 30 to 27. And in our illustration, that takes us down to $1.5 million and $1.3 million. If let's say we start our project in 25, again, we're not meeting domestic content requirements. We lose 15% of the credit. We're down to 1.2 million. If we start our project in 2026 and we don't meet domestic content, now they're going to completely erase the credit. So domestic content requirements and doing the analysis and understanding that is going to become increasingly more important as we look to begin these projects moving into the future. One illustration we've got down here at the bottom. Again, we talked about that 1 megawatt threshold as far as what that means to your prevailing wage and apprenticeship rules. Again, very important in this area, and that if you're under 1 megawatt, you're not subject to what I'll refer to the domestic content reduction factor. So you can imagine in working with clients and doing these types of projects, there's a lot of questions or understanding that we need to have or different fact set that we need to create to truly understand what we're looking at. Are we go over 1 megawatt? Are we using tax exempt financing? Where are we at in domestic content? All of these little pieces of information are going to help us get a good understanding of what you're looking at for your type of project. So obviously, hey, Jess, that's a lot of good tax code information. Thank you all for the rules, but why do we care as school district? What's the bottom line? Well, the exciting thing is we're not talking about for most of those what we call a competitive grant, or we're looking at a figure where, hey, it's an only to exceed $100,000, $200,000. We need to keep in mind the way the system works is it's a percentage of the eligible project. So the larger your project, the larger the eligible, threshold or eligible costs, you're taking that times a percentage and more of the dollars you're generating. So again, this is just an illustration. I can tell you, again, talk to your construction professionals. I have no idea what these costs. I just put these numbers in to keep this in mind. If we had a $3 million geothermal system and we hit 30%, well, that's $900,000. That's a good chunk of change towards this project. A thermal energy storage system at 30%, that's $600,000. We put a solar field in there. So again, if we were doing all these projects, and that's an illustration, we're talking $1.8 million of funding that's now available through the Inflation Reduction Act and looking at these types of projects. Just myself and working with many projects across the country. We have $8-9 million solar fields. We have many geothermal systems that are coming up. And it's very exciting to see the amount of dollars that are available for school districts that are looking at these types of projects. So what we're doing on slide 9 is we need to keep in mind is that we're taking it times a percentage to get that dollar amount, and we could be looking at significant funding for these types of projects. So energy community, we talked about that before, and it was just geographic. I just wanted to bring up, obviously, the state of Minnesota, and you can see the green and the different shaded areas. Not sure how they came up with these areas. There is some information here about what they're looking at, but just wanted to let you know there is an energy mapping tool. So if you're listening to me, and of course you wouldn't be doing anything else but listening to me, but let's just say you're on your side screen and you want to type your address in right now, you can go to the Baker Tilly Energy Community Map, and you could see if you'd be available, if it's likely for the energy tool. So that's a nice resource that we wanted to make available to you. All right. So one of the big important things with the Inflation Reduction Act is compliance. You know, we as governmental entities aren't used to filing taxes or going through that process because we're not subject to that. So now we're moving into this tax credit world. And because of that, all of these tax credits could be subject to IRS audit. So it's very important that we do compliance, we do everything that's necessary, and we follow the rules and feel comfortable with everything we're doing on the filing. So I'm not going to read sentence by sentence, and we've got the slide deck coming out, but just kind of hit some of the key points that are important if you do one of these projects to make sure you're doing good compliance in the IRA. So if we're over that 1 megawatt threshold, and we're going to be subject to the prevailing wage and apprenticeship items, we have to have the payroll for all of those people on the job. We need to have those records available. Slide 11 just gives you an idea of what's the information needed, and then we need to keep those records for 3 years thereafter. Again, to hit the 5 times multiplier, it's very important that we're following those prevailing wage and apprenticeship rules. So we as a school will need that information to back up everything we're filing with that tax credit. If we go forward with the prevailing wage and we don't have, we're not in conformity or the different things that could happen. Again, I won't go word by word or slide or section by section on the slide, but we do have it outlined. You know, we do have to pay back interest for employees that weren't paid properly. If we go for a period of time and it doesn't show that we've put any effort in to meeting these requirements, yet we're still going for the 30%. You know, there could be a 6% interest and there could be some penalties that play out. And this slide just guidelines from the IRS what happens if we don't have compliance on the prevailing wage and apprenticeship. So again, you know, we're not going to go sentence by sentence. We've got to keep our presentation within an hour. I just want to reiterate how important it is to comply and make sure we have the information if we're going to be subject to those prevailing wage and apprenticeship rules. So the apprenticeship, again, when talking to most construction folks, is kind of the newest mechanism that they're working with. Obviously, apprenticeship's been around a long time, but to actually have requirements regarding apprenticeship is a big change. So what the construction team will be working on is making sure that the apprenticeship ratio that's necessary is met for each day on the job. We hit the number of labor hours. We made a good faith effort to do that if we couldn't hit the apprenticeship hours. And so we need to have all of that information in place about how we're going to do that. So again, if we're over that 1 megawatt and we're going to be going for that 5 times multiplier, we as a school district need to have a system set up so that we're going to have compliance and track all of these records appropriately and put that together. Same thing on slide 14 is if for some reason we don't meet the apprenticeship rules, the IRS does have an overview or guidance as to what occurs with that. You know, if you don't meet the number of hours, what are the penalties to put that together? All of those items are outlined again, just reiterating how important it is with the record keeping, the compliance that we're going to need. So should we be subject to those rules? All right. So I apologize for slide 15 because there's a lot of words on here and there is a lot of small writing, and it's more better for the slide deck because we'll have to do the presentation, but we want to get the slide deck out to you so you've got a good information. So I'll summarize slide 15. So what are we seeing and how does a good IRA project work? Well, at the beginning is phase 1 is your estimates and options. Let's just say, for example, you're doing some improvements at your school district and you're trying to choose between a geothermal system or a traditional HVAC system. And your construction team is helping you with the cost, what that's going to be to your annual operations. You're kind of putting A and B side by side, and you're trying to make a decision which way you want to go. Well, now with the Inflation Reduction Act and possibly getting 30 to 40% back on that project, we have another point that we need to consider whether making that geothermal system makes sense. So at the beginning, you as the school district officials, your construction team, and your tax compliant consultant are looking at this project and putting the facts together. When are we going to begin construction? How are we going to bid it? Are we over, under 1 megawatt? Are we using tax exempt financing? So we're running all these different scenarios to try to understand the project and then figure out what type of tax credit percentage we're looking at. Again, using geothermal as my example, we can get the ductwork, we can get the equipment, but we can't get the curb cut. How do we take that total project cost and allocate how much money is going to be available for that credit as well? And so you're working with your tax compliant team, you're working with your construction team, and you're isolating all these projects facts to kind of build the stage. And then you can say, okay, well, my traditional system is A, my geothermal system is B, and with the IRA, which way do I want to go and how do I want to put that project together? And so I've had a lot of good conversations. We have an in-house engineer, and it's really nice to put great professionals together to problem solve and create a working group and see if it makes sense for schools and see what funding could be available through the Inflation Reduction Act. So phase 2 is once we've made the decision is, yep, it's worth it to us. We're going forward with that geothermal system. So this is a very important phase of the project because if we don't bid it correctly, if we don't set up the contracts correctly, we can cause a real problem at the end when we go to file the credit, so we didn't follow the rules. So we've decided to go through the geothermal system. Next is to have a meeting with the construction team and talk about the bidding documents. So if we're subject to those prevailing wage and apprenticeship rules that we talked about earlier, when we bid this project, we need to add the language in the paragraphs in those bid documents, letting those contractors know, hey, we're going for the IRA. We're going to have these prevailing wage and apprenticeship rules. When you're bidding this project, please keep that in mind. Also, if we've got multiple projects going on, so if we're going to do solar and geothermal, how are we going to bid those contracts appropriately, taking into account over or under 1 megawatt, and get that set up for everything we want to accomplish in conjunction with the IRS rules? I've had some unfortunate circumstances where schools have started projects. They were thinking they were getting all these IRA dollars and they're down the road, and they find out, unfortunately, there were some problems on the front end with the tax code. And a lot of those times we can do our best to correct it. But if we can catch those things up at the beginning and we're on the same page and we have those discussions when construction starts, it's a fantastic opportunity to head those problems off at the pass. So we're getting set up, we're doing our bidding documents, we're getting everything lined up properly with the IRS code. We're getting the contractors having a pre-meeting once it's been bid. Okay, we got to understand we're following these rules. We're putting all of that together and setting up our project for success. So then once construction starts, the big thing that's going on for the tax compliant consultants, your construction team, and then even yourself for the school district is your record keeping. So section 3, kind of looking ahead, is in the end, we're going to go to the federal government and say, hey, we completed this project. We're eligible for this tax credit. We're looking at whatever our dollar amount is. And we need to have everything in conjunction to back that up. So during construction, we're gathering the invoices, we're cataloging them, we're identifying eligible and ineligible costs, answering questions, or putting that together. So when we get to the end of our project, we have everything organized and we're ready to file. And again, what's really important here is because we hit the compliance, we're filing with the federal government, and then you're receiving as a school district the work paper and the documentation, everything you need to back that up. And we've got to have that available in the case that these tax credits are audited by the IRS. We have seen those information before. If you ever Google the Employment Retention Credit, or ERC, you can see some of the challenges that they've run into that tax credit. And we're going to be following the same type of process when going into the IRA. So having our work papers organized, having everything documented, and having everything ready to go is where we want to be as far as the school district. I think the other thing to keep in mind at the end is, okay, I've got everything put together, and you'll want to work with your tax compliant partner to see if they'll be supporting you in the case of the IRS audit. So when you're looking to hire different professionals and you're putting that together, do they include IRS audit defense as part of their services? Will they be there? And then how much liability are they taking on for their work? And that'll be very important when working through this process. So anyway, A lot of good money out there, a lot of great opportunity. I haven't been this excited in a long time to see, especially for solar geothermal. The opportunities are out there. It's just very important as we do these projects, we do it correctly with IRS code, and that we're able to take advantage of this wonderful system. So really appreciate your time. Next, I'm going to turn it over to Jeff, and I'll keep the screen going, and we'll talk about some other key issues that are important when looking at these types of projects.
Well, thank you, Jesse. A lot of, I call it academia there involved with the federal program. You're not surprised by that, most people. As a former superintendent who did a school bond to build a high school and remodel many buildings, it's important for a few things as you look at how this fits into what you're doing or planning to do. Obviously, you want to work with your district team, including your board members, your district cabinet members, financial advisor, and construction management team to evaluate what's possible. You know, Jesse mentioned the different projects you can do, but for your district, what would be possible? The first thing to do is a feasibility study based on your property, based on facilities, based on utilities. What could you do to incorporate more green energy, update your equipment and your technology for your school district? In the long term, you know, trying to save money for your district. Have conversations with your board members on their appetite for an IRA project. You know, it might be incorporated with a larger project you're planning, but as Jesse alluded to, you have to fully fund the IRA project up front, then submit the paperwork for reimbursement through the tax credit laws that are in place. Do you have that cash flow? You know, keep that in mind. You don't want to surprise your board members saying, oh, we're short. We thought we'd have money up front. That's not how this system works. So make sure you're planning well in advance on that one. Have a great conversation with your IRA specialist. Jesse has mentioned that quite a few times. There are quite a few wickets to get through here to make sure your project qualifies and you do it fully to the end. You know, a construction project lasts maybe 18 months to 36 months, depending on what you're doing and the follow-ups. But these tax laws require more follow-up every year to make sure you qualify and get your proper money as you're owed for the IRA. It's different, by the way, IRA is different for public utilities, municipalities, counties, and school districts because the tax laws are different. So don't fall into a trap talking to somebody local who's doing a project for maybe a city municipality. It may be different for the school. So make sure you talk to your municipal advisor and don't get caught by trying to lean from somebody else who's not in the school district. If you're already considering a project, you know, look at IRA. What could you maybe incorporate you weren't thinking? And again, talk to see what kind of green energy would work for you. Everything's different. It should be something that's a first consideration. Don't consider it a second consideration after you've already started a project. And I would say also have a conversation with your public utilities, municipality. How would this work with you to tie back into the grid? What else do they have for programs that might be supportable? And it's going to be different in every other municipality. So if you're a district spread across many municipalities or cities, you have to check to see what the rules are in those municipalities, see what they're going to do to help you as you incorporate more green energy into the fold. Next slide there, Jesse. As you heard from Jesse earlier, this is a federal program. Minnesota has additional green projects that they've had for a couple of years, especially focused on solar. But this is truly a federal program, and it's different than what Minnesota had out earlier. And some things are run through the Department of Energy, some are through the Minnesota Municipality Utilities. So make sure you're checking to see what project you're working on and how it qualifies for your district. Again, your financial advisor, tax advisor is be the best person to talk to see what qualifies and what works for your district and where you're at. Jesse had mentioned it's a 10-year program just starting. Public entities didn't qualify till 2022, so that's new. So keep in mind, this is really new and it's just rolling out in Minnesota. So there's a lot of things to consider and talk to about what would work for our school district, what may be working in our community. You know, it's an education tool as well. You know, how do you use green energy? What are the benefits of it for a school and a community? Talk to your board members in your community about what it would look like, and are they okay with a project of this magnitude to offset other costs? I think that Jesse's already captured. There's so many requirements with this project or this program. And a tax advisor who's fully capable with IRA understanding is what you want to go to, so you don't step in something. The last thing you want to do again is to misstep, not follow the right rules, and expect the 30% and get nothing, or get much less than 30%. So plan early, keep the IRA in mind when you're doing building projects. keep your CPA and municipal advisor in on the discussions for planning up front. There's a lot of things you can look at that are going to capture benefit for your school district when you're doing building projects. This is one of many great projects. There are other things you can do, and your municipal advisor can walk you through how to use different resources to help fund projects to better your district's position for facilities for your students. That's what I have. So up next, Ryan's going to give an example.
Thanks, Jeff. So we've really discussed and hammered this point. There's significant funding available for eligible clean energy projects, but school districts can't immediately take advantage of these IRA tax credits. So projects must be completed and placed into service before the credits can be applied for and claimed. Therefore, as Jesse mentioned, districts have to determine how to pay for the projects up front. A lot of districts will consider traditional tax-exempt debt financing, so some type of bond issuance. And each type of bond has its own trade-offs to consider. There's school building bonds, for example, that can provide the most flexible financing, but require voter approval. Other options, such as LTFM bonds, work for certain projects, but have other opportunity costs. Regardless, if districts choose to use tax-exempt financing, as Jesse mentioned, that'll slightly lower the amount of tax credits for the project because the federal government views tax-exempt financing as double dipping into federal incentives. Other districts may pursue or pursuing less expensive projects and or having significant fund balance. They may choose to pay for these projects in cash outright rather than finance them with tax-exempt debt. So again, working with your municipal advisor, you ought to consider and balance those opportunity costs of spending down fund balance versus debt financing. But using fund balance won't reduce the amount of potential credits available. And of course, there's federal and state grants that could also be available for certain types of projects, such as for electric vehicles and related technologies. But regardless of the source or sources of funding, it's important that you consult your municipal advisor to help you understand the potential trade-offs and limitations of these funding sources to maximize the benefit to your project. So Jesse, let's go to the next slide. And here's an example. So there's school districts in Minnesota already navigating the rules and requirements of the Inflation Reduction Act. Mounds View Public Schools is installing geothermal systems at 3 other schools, which are eligible projects. So they're financing it with tax-exempt LTFM bonds. Again, there's a bit of a runway here before the district can apply for those tax credits, since the projects have to first be completed and put into service. But at this point in the process, the district has identified the eligible projects and the costs that Jesse mentioned that qualify, and they're working on the prevailing wage and apprenticeship plan, putting into place all of the crucial documentation procedures so they can substantiate that credit on the tax filing down the road. And this is a good example, as Jesse was talking about, how districts can potentially receive extra credits above the base credit with that 5 times multiplier. So 2 of these projects or geothermal systems will be greater than the 1 megawatt, and Mounds View will have to meticulously document their compliance with the prevailing wage and apprenticeship requirements in order to receive that 5 times multiplier. That third system, though, is going to be less than 1 megawatt, and they don't have to comply with these requirements to receive that same 5 times multiplier. Let's go to the next slide, Jesse. So as we've mentioned repeatedly, the Inflation Reduction Act is an unprecedented opportunity for school districts to invest in clean energy projects. Again, this is a direct payment from the Treasury applied for and obtained after the project's complete and put into service. So the value of the credits available will be dependent on the district's particular situation, including the type and size of project and the ability to meet certain requirements as we've outlined. In addition, there are potential bonus adders, as Jesse mentioned, that can potentially make these credits even more lucrative. So this topic is beginning to gain traction as more districts learn about IRA and how this opportunity could help put some energy projects back on the table that previously seemed too expensive. But it's important, as both Jesse and Jeff mentioned, that you have discussions with your municipal advisor, tax professional, designers, and construction folks as you're planning to see how you could leverage IRA to include clean energy technologies more cost effectively. And the most important takeaway from this presentation should be that communication planning are essential to ensure that districts meet the requirements of the program and how to best leverage and maximize these credits. Districts should be including their municipal advisors and certified public accounting tax advisor who has knowledge of IRA at the beginning of and throughout the process. Projects that will be meeting the prevailing wage and apprenticeship requirement add complexity and require meticulous documentation. Otherwise, non-compliance, like Jesse mentioned, could jeopardize the IRA tax credits. And so we provided a lot of information here and tried to maintain a very broad overview of this program. But the Inflation Reduction Act is complex and guidance is still forthcoming in many areas. Districts should consult with experts in IRA and meet regularly to discuss their particular situations. However, this really is a tremendous opportunity for districts to invest in clean energy projects. And with that, I think we have a good amount of time here for questions.
I want to jump in real quick, and that one thing I forgot to discuss was, what if you've already completed some solar or geothermal at your district? Is it possible for you to get some funding out of the Inflation Reduction Act? And the answer is yes. If you began construction in 22, but you completed that construction after January 1, 2023, you could be eligible for that project. We've got to look at the specific circumstances, but projects completed after January 1, 2023 are eligible. So if you've done some solar, or you've done some geothermal, and you know that construction was substantially completed after that time frame, it would be good to reach out to your tax professional and give them the facts of that project and see if there's some funding for that project. So I think we did a good job of overviewing, going forward in planning, but I forgot to mention, hey, I've done some things and I completed in 23. Is that something I should look at as well? And the answer is yes.
Hi, great presentation. Thank you so much. I'm Heidi Neumiller from Cunningham. And I think my first question was, does biomass qualify as a project? We have a school district who is using biodigestate from their cafeteria scraps, and they're getting a boiler. So essentially their cafeteria food scraps are going to be heating their school. And I'm wondering if that qualifies.
Yeah, that would be interesting. I think it's possible because, as we talked about earlier, we did have the biogas and biodigester.
Right.
That's kind of exciting because I haven't seen that for schools yet. So it's possible. If it's possible, we could just follow up with you and just get the facts set. Like maybe we could shoot you 10 questions.
Yeah.
And then based upon that, we don't charge for that, just to give you an idea is, yeah, we think there's something here and there's some follow-up discussions, or gosh, unfortunately it didn't hit some threshold, but yeah, I've heard of those things, not necessarily for school, but I've heard of, the landfills and the wastewater treatment plants, and I don't see the downside in just checking into it. So no, great question.
Okay, fantastic. And then my second question, but I think you've answered this. It seems like you do have to have both prevailing wage and apprenticeship to qualify for that 5-time multiplier, not either or.
That's correct. They want both.
Okay.
So if you, whatever we're doing, solar, geothermal, and we go over that 1 megawatt threshold, you have a discussion with your construction team and say, exactly, we've got to follow the prevailing wage rules, and then we do have to follow the apprenticeship rules. Now, digging a little bit deeper, there's a lot of competition in the construction industry, and let's say, we tried to get some apprenticeships, and if you can prove you gave your best case effort, you've got some documents where your construction professionals reached out, but there just wasn't available, they do have an allowance for that. As long as you can document, hey, we did everything we could, we followed the rules, but the people just simply weren't there. There is an allowance or a system to do that on that side of it.
Thank you.
Yeah. Well, 700 pages of federal tax code usually just brings everyone to their feet, but that's all right. Dave, did you have anything else, or I think we're good to go then?
That was kind of it for the Q&A, and if anyone has any other questions, feel free to unmute or send them in the chat.
And then just to follow up on Heidi's question a little bit, you've got our contact information. Hey, we heard about this, or questions, please shoot those over to us. The biggest thing, it's important to Jeff and Ryan and I, is we don't want anyone to miss out on this funding. what would be the worst scenario is, a solar or a geothermal is important at your school. You're going to do that anyway, and you had no idea about the IRA. Unfortunately, that would just be lost funding. So please share this information packet. The other thing is, obviously we're talking as school districts, but cities, counties, hospitals, not-for-profits, all of these entities are eligible for the same system. So you could have a big impact for your community, not just for your school district, for all of those governments as well. So please continue to share that information so they can benefit. But again, thank you very much for everyone your time. We really appreciate it. And then hopefully this produces some funding for your school then.